When the spot Bitcoin ETFs launched in January this year, BlackRock CEO Larry Fink revealed that it was just the first step of the technological revolution in financial markets. The second step involves tokenization, digitizing every single asset in existence and putting it on a blockchain. Many people believe this will be bullish for crypto and good for the world. In reality, it will create a world where you will own nothing and be happy, because everything you own will exist on a centralized blockchain controlled by BlackRock. Today, we're going to tell you everything you need to know about BlackRock's plans for world tokenization and how you can protect yourself and your assets. I'll start by saying that most of the information in this video comes from an article published by Bitcoin magazine called Tokenised Inc., BlackRock's plans to own the fractionalized world. It was written by Mark Goodwin and Whitney Webb, and we'll leave a link to the full article in the description if you're interested. It's definitely worth a read if you have time. That said, the article begins with a summary of an interview that Larry did after the spot Bitcoin ETFs were approved. That's the interview we cited in the introduction. The authors critique the fact that BlackRock appears dead set on turning Bitcoin into an asset rather than a decentralized financial system. For context, there's a difference between Bitcoin the network and BTC the asset. Many argue that the implicit purpose of the Bitcoin network is to serve as the base layer for an alternative financial system. By putting Bitcoin into an ETF, many have argued that it has made it nothing more than an asset like BTC. To that end, the authors argue that the Bitcoin network is capable of being the base layer for an alternative financial system due to innovations such as the Lightning Network. They reiterate that the institutional investment that many BTC holders have been calling for threatens this implicit goal. Again, that's because institutional investors don't see Bitcoin as an alternative to the existing financial system. Rather, they see it as just another asset class, a more speculative tech stock, or the next generation store of value, depending on who you ask. FYI, it's not yet clear how institutions see BTC. Notably, the authors underscore the fact that large inflows into the spot Bitcoin ETFs could risk draining the liquidity that layer 2s like the Lightning Network need in order to become fully fledged financial systems. In plain English, they're sucking up all of the BTC in circulation, and it's all going to sit idly in custodial wallets. The authors then drill down into BlackRock's spot Bitcoin ETF filing, which includes a clause that says BlackRock, or rather iShares, will dissolve the ETF under various circumstances, including a regulatory request. The authors note that BlackRock did this with its Russian ETF after the invasion of Ukraine. For reference, there has been speculation that the US government will shut down the spot Bitcoin ETFs if BTC starts to threaten the US dollar. In this scenario, ETF holders would not be given BTC, but cash. The authors highlight the fact that BlackRock included similar comments in its Russian ETF liquidation. They also highlight the fact that BlackRock has a close relationship with the US government, and that Larry seemingly isn't a fan of democracy. They provide a quote from a 2011 Bloomberg interview as evidence, and I quote, "Markets don't like uncertainty. Markets like totalitarian governments. Democracies are very messy." The authors go on to recount the rise of BlackRock following the 2008 financial crisis, noting that Larry was one of the, and I quote, "pioneers of the mortgage-backed securities which caused the financial crisis." They note that BlackRock has since been keeping a key player helping governments during times of crisis. And if you watched our video about BlackRock's report prior to the pandemic, you'll know the asset manager appears to have predicted the financial response many months in advance. More about that in the description. By the way, if you're enjoying the video so far, be sure to smash that like button to give it a boost. And subscribe to the channel and ping the notification bell so you don't miss the next one.
So, ma'am, where exactly were you on the night of the murder?
I was right here, Detective, all night long.
You got anyone who can back that up?
You mean an alibi?
Yeah, that's the one.
No, I was all on my lonesome.
And what exactly were you doing all on your lonesome, if you don't mind me asking?
Well, keep it under your hat, Detective, but I was looking through the Coin Bureau Deals page.
What's a Coin Bureau deals page when it's at home?
It's only the place where you'll find the best discounts and promos in all of crypto.
What do you mean?
I mean, trading fee discounts of up to 60% and sign-up bonuses of up to $60,000 on some of the best exchanges.
Holy smokes! They got discounts on hardware wallets too, by any chance?
They sure do, Detective, like you wouldn't believe.
Well, that sure sounds kinda swell, lady, but just you give me one good reason why I should believe a single word you say.
You don't have to take my word for it, Detective. Take a look at the link down below and see for yourself.
She wasn't kidding. Those deals really were something else. Turns out that crypto ain't such a bad place after all. You just gotta know your way around.
Now, in the second part of the article, the authors assess whether it's possible that the real reason why the spot Bitcoin ETFs were approved was so that BTC's price could be manipulated. For those unfamiliar, there is evidence to suggest that large Wall Street entities have been manipulating gold prices. As a fun fact, megabank JP Morgan was reportedly fined almost $1 billion in 2020 for manipulating precious metals and the treasury market. Naturally, there's been speculation that the reason why JP Morgan did this was to keep the price of precious metals low and interest rates suppressed. The reason why I say all of this is to point out the fact that BlackRock chose JP Morgan to be one of the counterparties for its spot Bitcoin ETF just 2 weeks before it launched. Those of you that saw the headlines will know that it took BTC holders by surprise, given that JP Morgan's anti-BTC stance. The authors then go on to add that despite JP Morgan's anti-crypto stance, the megabank has been experimenting heavily with blockchain technology, launching the Tokenized Collateral Network, or TCN, in October last year. Lo and behold, BlackRock was one of the counterparties in a subsequent trade made on the TCN. After recounting all of the times JP Morgan has been found guilty of manipulating the markets, the authors then note Larry's comments about a tokenized system being resistant to corruption as being blatantly false. Of course, that's because of JP Morgan's track record, which calls the honesty of the TCN into question. Obviously, BlackRock has had its fair share of blunders as well. The authors focus on the most infamous, and that's BlackRock's ESG investment ideology. If you've watched any of our videos about ESG, you'll know that it hasn't produced any actual profits, hence why it's more appropriate to call it an ideology. As some of you may have heard, BlackRock has been publicly trying to distance itself from the ESG trend that it helped create, with Larry saying late last year that he stopped using the term due to its politicalization. However, this doesn't mean that BlackRock has ditched ESG. Far from it. The authors argue that the whole reason why BlackRock continues to promote the ESG ideology under a different name is because the asset manager wants to control these new markets, much like it controls many of the largest ETFs. Logically, it stands to reason that it could be trying to do the same with crypto. The authors reveal that entities affiliated with BlackRock have essentially been pressuring countries into making parts of their land untouchable in exchange for loans. They argue that this is equivalent to the same kind of debt slavery being enacted by the IMF, and reveal that it's a key part of the UN's SDGs. More about the SDGs in the description. Now moving on. The authors then claim that despite BlackRock's anti-ESG commentary, it's still very much committed to the same goals, including these kinds of crazy debt plans. They believe that BlackRock has read the room and understood that it needs a new way to mark this financial system that's appealing to the masses. They go as far as to claim that BlackRock's recent pro-crypto stance is effectively a Trojan horse for the ESG ideology. Talking about things like tokenization will get people excited and on board with BlackRock. As I noted in the introduction, it seems that so far this narrative has been having the desired effect. This ties into the work that's being done behind the scenes by the likes of the Bank of International Settlements, or BIS, the so-called Bank for Central Banks. Basically, the BIS has been working on tokenizing financial assets and doing this on blockchains that, and I quote, encode policy and regulatory requirements. On that note, if you watched our video about the future financial systems the BIS is trying to create, you'll know that this is it. Specifically, It's a private and permissioned blockchain where all assets are tokenized and where central bank digital currencies, or CBDCs, are the primary means of exchange. Mark and Whitney's article acknowledges the use of CBDCs in this tokenized system and even talks about the new environment based on credit scores the elites are trying to roll out. Now, as it so happens, we did a video about that too, and the link is in the usual spot. Now, the article goes on to draw parallels between the tokenized financial systems that the likes of the BIS are working on and the ones that Larry and Blackrock envision. The authors recount Larry's comments about how everyone and everything will be tokenized on one ledger with its own unique number. Yikes. Not only that, but the authors draw on efforts by other powerful entities not affiliated with BlackRock to establish so-called natural asset corporations, which will practically involve transforming nature itself into a series of corporations which can list their stocks on exchanges to be speculated on. Wild. What's even wilder is that one of Australia's largest banks is experimenting with creating a stablecoin that's backed by tokenized natural assets. But back to the topic at hand, BlackRock tokenizing everything, including you and me. The authors expand on this in the third part of the article. They start by talking about this year's World Economic Forum conference in Davos, which we actually summarized in a recent video. What we didn't mention in that video were the comments made by Circle CEO Jeremy Allaire. As most of you will know, Circle is the issuer of the USDC stablecoin, whose reserves are managed by BlackRock. Not surprisingly, Jeremy is a fan of tokenization. USDC is literally a tokenized US dollar. The authors connect this to the disclosures in BlackRock's spot Bitcoin ETF filings, which say that the price of BTC can be influenced by stablecoins like USDC, that BlackRock manages USDC reserves and is an investor in Circle. In other words, BTC's price can be influenced by something BlackRock controls. The authors stop short of saying that this creates an enormous incentive for Circle and BlackRock to disrupt other stablecoin issuers. Instead, they focus on the fact that both Circle and BlackRock want USDC to be front and center in the tokenized financial system that they both seem to be working on. To put things into perspective, the authors provide a statistic from Boston's consulting group, which estimates that the value of the tokenized financial system will be $16 trillion in 10 years' time. If this prediction comes true, then it translates to trillions of dollars of USDC, which Jeremy predicts will be the case. Meanwhile, the WEF is predicting that the tokenized financial system will be worth this amount by 2027. This should be taken with a grain of salt, considering that the WEF once predicted that Bitcoin mining would use all of the world's energy by 2020. Not sure if you've noticed, but that didn't happen and never will. Now, what's scary is that Citibank noted in a 2023 report that creating a tokenized financial system where everything is tracked and controlled by financial elites is, and I quote, end state of the financial system. The irony is that this is what Citibank envisions isn't actually that far from the existing crypto industry. By now you'll know the difference is that tokenized assets on crypto blockchains are public and also permissionless, meaning that they actually can't be controlled, at least in theory. By contrast, tokenized assets on private and permissioned blockchains can and will be controlled to the highest degree possible. Speaking of which, in the fourth part of the article, the authors pivot back to Larry's vision of all tokenized assets existing on a single private and permissioned blockchain. They reiterate that this vision is consistent with the UN's SDGs, which BlackRock has been enforcing via its ESG ideology. They cite SDG 16, which mandates that every country implements digital IDs by 2030. To bring you up to speed, the SDGs are supposed to be all met by countries by 2030. This is why you've been seeing the 2030 date everywhere. As you might have guessed, stuff like smart cities and CBDCs are also part of the SDGs. You can learn more about the UN and how it controls the world using the link in the description. But moving on. Now, the authors repeat that it won't just be stocks that get tokenized and put on a single ledger, but the digital IDs that governments are working on. If you've watched our video about the EU's digital ID, you'll know that it includes a built-in wallet. The authors note that all digital IDs will have this eventually. In the fifth part of the article, the authors unpack the narratives that have been spun to promote BlackRock's vision for tokenization. They commence by critiquing Argentina's new Prime Minister, Javier Milei, for meeting with Larry to discuss what opportunities BlackRock could bring to the country. The authors rightfully flag this as suspicious, given Javier's libertarian stance and BlackRock's apparent reputation for being one of Wall Street's titans that profits from struggling economies. I'll quickly remind you that BlackRock will be helping to rebuild Ukraine once the war is over. Probably nothing. In Argentina's case, the authors reveal that BlackRock is planning on purchasing assets belonging to the government as part of Milei's plan to privatize certain public operations. The authors note that this is not surprising, given that BlackRock was one of Argentina's largest bondholders per a 2020 Bloomberg report. In fact, it was apparently BlackRock that opposed Argentina's attempts to restructure its debts after the country defaulted in early 2020. The authors speculate that BlackRock's involvement in Argentina and Milei's relationship with the asset manager is why he was allowed to speak at this year's Davos event. The authors then note something that we notice, and that's that despite Milei's apparent criticisms of the WEF during his speech, he was nonetheless well received by the Davos elite, per many media reports. If you watch the actual speech, you'll know that WEF chairman Klaus Schwab even personally introduced him. The author again draws parallels between Milei's apparent popularity at the WEF and BlackRock's very own public 180 about ESG. Put simply, it appears that it's all a marketing gimmick. After all, it's extremely unlikely that the WEF and BlackRock have abandoned their plans for a global digital ID and the like. It's much more likely that the elites understand that people want anti-establishment candidates and anti-establishment policies, so they're promoting their own fake anti-establishment candidates and fake anti-establishment policies to increase their public appeal. This seems to be working surprisingly well. The authors put it more bluntly, and I quote, "You will allow BlackRock to build the panopticon of tokenized Earth with Americans, retirement money under the dialectic pretext of owning the liberals, unknowingly connecting all aspects of ownership to centralized databases, walled identity gardens, and fractionalized reserve assets transmitted and issued on private blockchains of Wall Street banks." They conclude, however, on a slightly more positive note, and I quote, "The new tokenized economy must be created under the guise of free markets leading newfound prosperity for individuals, and not a digital serfdom paid with misunderstood user agreements, biometric credentials, and faux collectivist talking points." This brings me to the big question, and that's how you can protect yourself and your assets from a totalitarian tokenization that BlackRock and its cronies are trying to implement. For starters, you can stop buying into their narratives, specifically the idea that they're somehow down with decentralization. Next, take a second to assess how much of your net worth is tied up in assets that BlackRock could, or will want to tokenize on its blockchain. Spoiler, but if you're in crypto, chances are that a portion of your assets that have been allocated to coins and tokens that are aligned with BlackRock. I'll give you a hint, stablecoins. If you're not into crypto, then you need to understand that TradFi assets you hold will likely be the first to be tokenized. This means stocks, bonds, and any other stuff that you trade or hold through your bank or broker. Next, you can expect the money in your bank to be tokenized, be it with a CBDC or otherwise. After that, expect to see all of the physical assets you own tokenized on a blockchain, likely starting with your house and your car. All of the records of you having ownership of those assets will be digitized, which means that your ownership can be turned off if you, say, publicly go against BlackRock's ESG ideology. This is precisely how you'll own nothing and be happy. You see, when these systems are all rolled out, they will be completely benign and even convenient. It won't be until some crisis or the election of some controlling government that you realize how fast this powerful technology can become very dystopian. Thankfully, you can protect yourself in 3 ways. The first way is to purchase valuable assets that can't easily be tracked and tokenized, such as gold coins purchased with cash. The second way is to get in touch with like-minded people so that you can create an economy with these assets. The third way is to hold, promote, and adopt similar technologies that retain your freedom, namely cryptocurrencies. So take a second to consider that meme coins could someday be more valuable than stocks, simply because you can trade them anytime that you want using a permissionless blockchain. And as we've mentioned many times before, doing what you want with your assets whenever you want is the definition of financial freedom. This kind of freedom is quickly disappearing from the existing financial system, thanks in large to asset managers like BlackRock and organizations like the UN. The silver lining is that people are starting to notice this and slowly holding and promoting and adopting alternative technologies. All we need to do now is to keep up the pace and remember not to get caught up in the narratives that are being spun up by the very same entities that are actively trying to enslave us. With some luck, the launch of the spot Bitcoin ETFs will supercharge interest in the crypto industry to the point that it reaches breakout adoption that can't be stopped. Let's just hope that we don't accidentally end up adopting crypto projects and protocols that are aligned with BlackRock. That's it for today's video. If you found it informative, smash the like button to let us know. If you want to stay informed, subscribe to the channel and ping the notification bell. If you want to help inform others about BlackRock's plans to tokenize everything, be sure to share this video with them. If you happen to be stacking sats to protect your personal wealth, then check out the Coin Bureau deals page. It's got trading fee discounts of up to 60% and sign-up bonuses of up to $60,000 on some of the best crypto exchanges, as well as the biggest discounts on the best hardware wallets. You can find all of these deals and more in the description. Thank you all so much for watching, and I'll see you in the next one. Until then, crypto friends, this is Jessica, out.